right, good afternoon. It is Monday, September the 12th. And boy, what an interesting bunch of stuff we got going on right now. The S&Ps are in the middle of this rollover from September to December quarterly contracts, with the September's due to expire and go off the board with Friday of this week. Friday's triple witching expiration on the OPEX at the end of the week. Before we get there, though, we've got to get through tomorrow, Tuesday, with a CPI report, Wednesday, a PPI, Producer Price Index, Thursday, retail sales, Friday, Michigan sentiment, consumer sentiment prelim, which is a big one, and then the OPEX at the end of day Friday. So there is more than enough to make a difference this week, starting tomorrow with this CPI that's due out at 7:30 in the morning Chicago time tomorrow morning. A big number, I think, breaks this market in line. Maybe continues to rally a little bit. Here's the next confusing part for you. The spread between the September contract and the December contract has a positive plus premium to the December side of 18 and a quarter points. So we have a huge rollover gap of 18 and a quarter points. The SPX, what you see on the board here, is tied to the September. So I don't know what to do here as far as like trying to keep this as clear and confusion free as possible, but to just tell you that there is an 18-point gap between the SEP and the DECE, and the SPX that I'm quoting you is basically a September price, meaning that if you've already rolled to December, then you're going to have to add 18 points to everything that I'm going to tell you. So with that, I'm quoting SPX in tonight's video, which is essentially basically the same as quoting a September contract. If you want to translate this to a December S&P futures contract, add 18. Okay. So today, this thing traded up to 41, almost 20, really. Probably maybe hit 20, actually. Yeah, it hit 20, 41.20. So that's a big deal because if you remember last week, we had two bullish targets, 40.85 and 41.20. If inside 85, then trade 20, 41.20. Well, it's there. But while it's there, obviously that pushes the December considerably higher into, 38s or something. So our first H1 quant level for this week is also a 618 retrace from the top of this August move to the bottom of this break here just last week on Tuesday, 3,800 or something that rallied, now 300 points, in a matter of just a few days. Pretty amazing. So your average kind of daily range right now is about the same as current SPX that you can see quoted there, 10s up to these, call it, what is it actually, 65? That'd be your bullish target for tomorrow. Okay, 41.65. That's about 55 points, and that is the current ATR on an RTH session right now for the SPX. If a big number tomorrow in the CPI and this thing starts to break, I think we can target. Let me get Give me a minute to think. I got to do all this conversion stuff in my head. It's driving me crazy, to be honest with you. I'm really not in the mood for this 18-point craziness on this gap. But what is it? It would be down to tomorrow. A bearish target, I believe, would be 40.26, which is a big move. 40. Just call it 40 and a quarter. I mean, that's a pretty big move. That's basically back to the open of 2 weeks ago is where it would be. That'd be your bearish target. And below there, but not tomorrow. This would be later in the week if it got really crazy on the downside. Would be the next one would be 39.80. But I'd be worried first about just seeing 40 quarter. Essentially back to the not last week, but week before that's open. And that's a pretty decent move to the downside. But that'd push it down into the weekly pivot, and simultaneously the weekly open about 2 weeks ago, and the top, importantly also, of this lower balance region down here as well. So that would be to come back down to test, okay, am I going to revisit balance down here? That does not look like what it's doing right now. Actually, what it looks like it's doing is it's working its way up here to this bullish target I just gave you at this 41.60s up here. That's what I got for you. Just be careful this week. I mean, there's just really, honestly, more than enough going on right now. It makes it a little challenging given it's the roll, then the width of the spread in the roll, the current place that we find ourselves, the current position, the current place that we find ourselves within the period of the rollover, and then the market's hypersensitivity to the very news that we get tomorrow and Wednesday. Not to mention that just in front of one of 4 in the entire year quarterly expirations. So, there's plenty enough going on here. All right. Good trading. We'll just see if we can get through this to where we can start to really make a better read on stuff, because there's a lot that's up in the air right now that's kind of sort of juggling right now. So, all right. I'll see you again on midweek update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me